It's Monday and you're watching FreightWaves Now. I'm your host and lead economist, Anthony Smith, and coming up, I'm going to give you a shipper update. But first, we're going to go to Michael Vincent, the dude himself, for a carrier update brought to you by PowerFleet. Stay tuned.
Good Monday morning, I'm Michael Vincent. This is your carrier update brought to you by PowerFleet. Let's jump into it. First, looking at our outbound tender volumes across the country, I've got this year in blue, 2019 in orange, 18 in green. We've come out of the holiday trough as we do every single year, and looking forward over the last 2 years, there's usually this kind of trickle off towards the end of the year. Now, will we see that or won't we? We've plateaued over the weekend as we normally would, and we'll see what happens over these next weeks. Now, looking at the imports and the consumer sentiment, consumer spending, we'd expect this to keep moving up, I would think, and to the right. Moving forward to outbound tender rejects, again, we've come off the holiday spike. You see it there in the blue and the far right. We've leveled a little bit over the weekend at 25.4, and this is again versus the last 2 years, 2018 in orange, 2019 in green. We would expect that we're at the bottom, near the bottom of the trough is where I suspect we're at. As you can see it over here in these, the last 2 years, we hit a little trough and then it starts to move up as we head towards the end of the year, Christmas and New Year's holiday, as drivers head home for those holidays. So we expect that we're at the bottom of that trough and we'll start moving up a little bit, or quite a bit actually, maybe even hit that 28% again by Christmas and into the Christmas and New Year's holiday. Moving forward to outbound, our van tender rejects, van in the blue, reefer in the orange. The yellow is flatbed. Looking at these tender rejects, you can see in the orange line that the reefer has already had a slight tick up. Van has leveled off, and so has flatbed. Expecting those to start moving up as we get closer to the holiday again. Moving forward to average length of haul. This is interesting. The average length of haul, or O Aloha in Sonar, has been quite elevated over the last few years. Elevated relative to the last few years, but certainly elevated. Dipping down as we've moved into December, has come back up, and you can see this on our volume map as well, where those markets are that are trending up, causing this to happen. But we start to see that move up as we start to see the cycles and inventories are out of whack, and trying to get those goods to consumer prior to the holiday right from the ports as those imports come in. We know that there are lag times at those ports, so the average length of haul is rising as they try to get those to market. Looking at the maps, outbound tender rejects, this is overall all modes, outbound tender rejects in the color, blue indicating more rejects, and the volumes in the height. We can see California, obviously Southern California, very, very high volumes, as is Harrisburg, Elizabeth, and even into Columbus, Ohio, and Indianapolis, big distribution hubs over there where volumes are very, very high. And you can see that the darkening in the blue is your tender rejects, or the tightening of capacity in those markets. Also, obviously, Atlanta, very high in volumes. Outbound tender rejects in both Southern California and Atlanta, still high in the low 20s, but not moving or volatile. If we move forward and look at the van tender rejects, we see that the east and central United States, quite dark blue, quite volatile. We see some really light areas like in West Virginia, Detroit area, but then heavily dark and being impacted by those other high volume outbound. If you look at Erie and Pittsburgh, deep, deep blue in the van tender rejects. Very, very high tender rejects, 40% over here, being affected by Columbus, Ohio, Harrisburg, with those big distribution hubs really sucking in that capacity and making it difficult to find capacity in those markets. Reefer, if we look at the big reefer markets, we're seeing big volumes out of the Southern California, obviously up through Utah, Idaho, and into eastern Washington, central United States as well. And look at the Orlando market and Atlanta market sucking up the capacity from northern Florida. Very, very difficult there. If we look at Los Angeles here, I broke this down a little bit. Los Angeles, what we're looking at here is a return to head haul, very strong there in a move. Expect capacity to be tightening there soon. That's your carrier update. I'm Mike Vincent.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm the lead economist here at FreightWaves, Anthony Smith, and if you remember, last time I was here, we went over some of the latest in manufacturing. So we're gonna go over again what's the latest within manufacturing. Right behind me, I have the ISM PMI, and that's gonna be in the blue line, and in the green line, I have, of course, our flatbed outbound tender rejection index. So last time, if you remember, manufacturing overall was outpacing some of my expectations. What we saw in the latest PMI reading was some downward movement. Of course, when we look at the PMI, it's indicative to be sure of where that growth benchmark is. So anything above 50 is indicative of expansion within manufacturing, while anything below 50 is indicative of contraction. So what we saw in the latest month was a 57.5, showing that there is indeed expansion, but there was some slightly downward movement. So kind of showing that there is some diminishing growth, some slower growth happening right now. So that's really something to keep in mind when we're looking at overall manufacturing. We are in a recovery mode for manufacturing overall, but some of that movement is starting to slow down and ease a bit. And of course, when we're looking at these manufactured goods, that green line, a lot of that's going to be transported via flatbed transportation or flatbed trailer types. Looking at this next chart here, I have new orders. As you all know, new orders is indicative of things that are set to go into production, and then those things get shipped throughout the country. So a little bit of a leading indicator, if you will, for what's on tap for a lot of manufacturing. And what we can see within the new orders component is it is very strong still in that 65.1, but that is another area that is coming down. Again, overall expansion, seeing that 65 is a very positive number, but it is starting to ease a little bit as we go into the fourth quarter, as we move throughout the fourth quarter, I should say. This is, again, within our expectation that we will see some slower growth. We are seeing some momentum building behind manufacturing, but overall, we're still not there just yet. And important to remember that this is a diffusion index. So just if we see a headline that says at an all-time high for new orders or any other of these subsector components, it's not it's not necessarily indicative of it being above the year-ago levels, just showing that it's on a month-to-month expansion. The area that I really want to draw attention to is that employment subcomponent. So for the employment subcomponent, this is very critical because we saw that it moved down to 48.4, and as you know, that's indicative of contraction. So there are a couple things that this can really have implications for. One, of course, is these are individuals that are not working and they're unable to make purchases, but this is going to make strains on the overall supply chain depending on which segment they're going to be most involved in. So we're looking at the employment sector of it all. That's going to really indicate that there's going to be fewer people able to be on the lines for many of these factories. That's going to add a lot of constraint to some of the supply chain. So this is going to really lead to probably increases in the backlogs and really push a lot of things backwards as we see more and more more and more orders kind of start to pile up. So this can be something that's going to really hamper some of the production moving on down the line. Now, a little bit of good news, what we see here, also going to be indicative of flatbed trailer types, total construction spending for residential. What we saw in that latest month of data is that there's some upward movement there. Of course, it's going to be different than manufacturing, but there is some positive movement here. So something that some of those flatbed trailer operators can really see that they can be some opportunities here. Of course, this data point is a bit lagged in comparison to our flatbed outbound trailer index, but something to look for any kind of potential opportunities. That was a lot of information, but thank you so much for tuning in. That's going to do it for this shipper update and this Monday edition of FreightWaves Now. Thank you so much for tuning in, and as always, you can check out all of our content on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.